Hi, I'm Ant Joblin and welcome to IP Go, the show where we take a look at the IPO world, past, present and future. Today we're taking a look at SelectQuote, a firm that provides sales leads to insurance companies. The firm has filed to raise $450 million in an IPO. At first glance, it is growing smartly, producing profits, and therefore appears reasonably priced. Based in Overland Park, Kansas, SelectQuote lets consumers shop online for Medicare, life, home and auto insurance quotes. The company does not provide insurance. Instead, it identifies consumers shopping for specific types of insurance and puts them in touch with its insurance carrier partners. SelectQuote earns commissions from its insurance carrier partners for the policies it sells on their behalf, according to their prospectus. Revenue generation is commission-based via first-year and renewal commission agreements with insurance carriers. In terms of leadership, management has a firm idea on how to grow the business by virtue of being led by CEO Tim Danker, who has been with the firm since 2012 and was previously founder and CEO of a healthcare insurance distribution business, Spring Venture Group. Prior to this IPO, SelectQuote had raised over $80 million from investors, including private equity firm Brookside Equity Partners. It markets its online services via online and offline marketing channels, primarily including television, radio, third-party marketing services, and search engine placement. Marketing and advertising expenses as a percentage of total revenue have been uneven, but they are trending lower as revenues have increased. This suggests that the company is securing important resident mind space in the American consumer consciousness. In revenue terms, the firm has grown at a plus 40% growth rate since 2018, and 9-month performance numbers came in at $390 million when reported on March 31st. Net income for the same period registered at $61 million for 2019-20 period 2. As of March 31st, 2020, SelectQuote had $158 million in cash and just shy of $600 million in total liabilities. Free cash flow during the 12 months ended March 31st, 2020 was a negative $57 million. SelectQuote intends to raise $450 million in a gross proceeds from an IPO of its common stock. The company is selling 18 million shares and shareholders are selling 7 million shares at a midpoint price of $18 per share. Assuming a successful IPO at the midpoint of the proposed price range, the company's enterprise value at IPO would approximate $3.2 billion. The company's financials show strong revenue growth in most recent reporting period, net profit growth, but a significant swing to cash used in operations. Analysts have been making comparisons with EverQuote, and it's worth considering the following points. First, that EverQuote has reported revenue of $277 million and made a net loss of $4.18 million over the past 12 months, while SelectQuote is up to $464 million in total revenue and $74 million in net income. SelectQuote is due to IPO on May 21st, 2020, and based on recent experiences, it is quite rare to see private equity-backed companies listing with such fast growth and low debt. This is a stock we think is worth keeping an eye on. This is an IPO that requires careful consideration before placing any bets, so as usual, make sure you do your due diligence before making any investment decisions. Stay safe and see you next week.